Step 3. Make it a routine. Establishing a routine for investing can be challenging, but it's crucial for success. Here are some tips on how to make investing a habit. Set a specific time. Set a specific time each week or each month to review your investments. This could be on like a Saturday morning or the first day of the month. Having a set time will help you remember to do it, and it'll make it easier to fit things into your schedule. The next thing is make it a priority. Investing should be a priority in your life, just like paying your bills or going to work or feeding yourself. You need to make a conscious effort to prioritise it and make it part of your routine. Next, automate it wherever possible, like I mentioned previously. Automating your investments can make it easier to stick to that routine. Set up your automatic contributions to your investment accounts each month so that you don't have to remember to do it yourself. And the next one is keep it simple. Investing doesn't have to be complicated. Choose a few investments that are aligning with your goals and your risk tolerance and stick with it. Keeping it simple will make it easier to stick to your routine. It's essential to understand that investing is a marathon, not a sprint. Long-term investing allows you to ride out the inevitable ups and downs of the market and potentially earn higher returns over time. It's important to resist the urge to constantly be checking your investments and to make frequent trades based on short-term market movements. Instead, what you should be doing is focus on the underlying fundamentals of the companies or funds that you're investing in, because this is what made you invest in them in the first place. Look for companies with strong financials, consistent earnings growth, and a track record of success. Consider diversifying your portfolio across different sectors and asset classes, and that's going to help you manage your risk. When it comes to long-term investing, it's also important to have a clear understanding of your investment goals and your time horizon. Are you investing for retirement, a down payment on a house, or something else? Your goals and your time horizon can help your investment decisions and ensure that you're taking an appropriate level of risk. By focusing on the long term, you can avoid the temptation to make short-sighted investment decisions and build a portfolio that can help you achieve your financial goals over time. Read books, watch videos, and talk to a financial advisor if you need more guidance. Did I mention that I wrote a book about personal finance? It's called The Wealth Wisdom Blueprint. It's available on Amazon, and there's a link in the description below. Next, you'll need to open up a brokerage account. This is where you buy and sell the stocks and bonds and any other securities. There are many online brokerage options available, so do your research to find the one that best fits your needs and offers the tools and resources that you need to make informed investment decisions. Once you've opened a brokerage account, you'll need to fund it. This can easily be done by transferring money from your bank account into the investment account. After funding your account, that's the time to start investing. Remember, start small, choose investments that sit well with you and align with your risk tolerance and investment goals. Diversify your portfolio.
Ever wonder how banks invent money out of thin air? It all starts with your deposits. When you put money into a bank, they're only required to keep a small portion of it as reserves. The rest of the money can be lent out to other customers. And when you borrow money from a bank, they just create a new account for you and add that money to your balance. This creates a multiplier effect where the original deposit can be lent out many times, resulting in a much larger amount of money in circulation. And just like that, money grows on trees. Well, not exactly. But you get the idea. So next time you put your money in the bank, just remember, they're not just holding onto it, they're using it to invent more money for themselves, to keep the economy moving.
How do you invest in the stock market? Well, here's what I would suggest. Do your research, set your goals, open an investment account with a broker. I would recommend using a stocks and shares ISA because it's more tax efficient. You don't get taxed on your dividends or any capital gains. Choose your investments, research them thoroughly beforehand, diversify your portfolio to make sure you're getting a good spread of various industry types. Monitor your investments just to make sure that they're performing as you expected. I would recommend investing for the long term. So that means not to be too concerned about the various ups and downs that the market has on a daily, weekly, monthly basis. Invest for the long term, but always keep monitoring just to make sure that everything is heading towards the goals that you set for yourself. If you've got any more questions, please ask me, and also subscribe for more.